If you've been thinking about owning investment real estate or heard others talking about it, you've probably heard them talking about cap rate. So, what is cap rate, and how do I find it on a rental real estate property? The capitalization rate, also known as the cap rate, is used in the world of investment real estate to indicate the rate of return that is expected to be generated on a real estate investment property. This measure is computed based on the net income, which the property is expected to generate, and is calculated by dividing the net operating income by property asset value, and is expressed as a percentage. It is used to estimate the investor's potential return on their investment in the real estate market. Let's take a look at how you get the property's total asset value and net operating income to find the cap rate on a quick example. First, we need to get the total asset value. We need to take all the costs that will be associated with purchasing and rehabbing a property to get it ready to market at our desired rent. So we just start with the price. While we are exploring a purchase, we will have the actual price and an estimate of what the property should sell for. The asking price would be the list price, and the analysis price would either be provided by a broker or have some reason that we came up with that price that we're showing. Maybe it's just simply the highest price that we can offer to get to our cap rate. Next, we will add in CapEx, or everything that we are going to add to the home to get it ready to market. So if this is a distressed home, the price could be significant. Or if it's a new build, it could be just adding a few safety features and maybe a couple thousand. On the average, we usually spend $20,000 to $35,000 on a 10 to 15-year-old home with just cosmetic and mechanical upgrades. Add the purchase price, CapEx costs, closing costs, and that will give us our total asset value. The next thing we want to know is what we are expecting to get in rent. This should not be some super optimistic number, but a real number that we got to with neighborhood comps, or how a specific area has been performing. With an estimate of monthly rent, we can multiply that by 12 to get our gross yield. And then it's time to start adding in costs. The first thing it's important to take out is the vacancy cost. This is not a direct cost that you will incur, but you will not receive income, whether the home takes a few weeks to rent, or if your tenant can move in but not for 3 weeks. It's important to allow some room for the income that you will not receive here. I have 5% as our vacancy rate. Anywhere from 5 to 10% is standard, but would depend on what you expect in your market, or maybe just what your client expects to use as a vacancy loss. Subtracting vacancy loss from gross rent will give us annual effective rent. Next, it's time to start taking a look at operational expenses. Common costs for that are taxes, which can be found on county websites, along with the understanding that they might increase. In North Carolina, I was able to find a breakdown by county of when the next expected tax increases will be. That's not needed for CapEx, but useful information if you expect the taxes to increase shortly after a purchase. Management costs can vary. You can have as low as 0 if you manage your own properties, or I've seen up to 12% as a common cost. Usually it falls somewhere between 6 and 12%. I chose 8 just as an average cost. Maintenance costs are any repairs that you'd be responsible for during a tenancy period. Maybe an oven stops working, a plumbing issue comes up, it's a good idea to have an allowance to cover these. Again, here we just use a 10% estimate. Insurance costs are usually similar for an area, and if you call up an insurance agent, they should be able to give you an estimate on a property, or even tell you exactly what the percentages that they would be using to estimate on your property. HOA dues, if there are any, are the last expense that we will add in before we have our total operating expense. This brings us to our total operating expense of $88.13. So if we take our effective rent, $20,520, and subtract $8,813, that brings us to our net operating income of $11,707. Now, if we take that and divide it by our total asset value of $302,500, we will get a total cap rate of 3.9%. Remember, everybody's cap rate goal is a little bit different. I've seen as low as 3.5, as high as 6. If this video was helpful, please give us a like and subscribe to the channel.